average retirement age in America is somewhere between 61 and 67. It doesn't mean you can't retire early. How about at 50? Hi, I'm Greg Welborn with First Financial Consulting in Pasadena, California, and I'd like to talk to you about that pipe dream. Or is it? Most people probably think it is something that's unachievable, but we believe you can retire at 50 if you plan well and you plan early. So let's review the 7 steps to plan on retiring by 50. Step 1, set your retirement goals, establish what they are. Now that retirement is different for every person, and you need to establish what your unique retirement is going to be. And it's your normal living expenses, but it's also the bucket list items. What are the dreams that you've had about the things you want to do, the gifts you want to make, the places maybe you want to see before, in this phase of life? You got to put all that together. And where you live matters. Are you in a high-cost state or a low-cost state? You got to put all that together, establish what retirement looks like for you. Step number 2, then, is assess your financial readiness to retire early. Now we kind of know where you're going to go. We've assessed what that looks like, but you have to figure out where you are now. What's that composition of assets and income and cash flow now? And how do we get from now here to future there, that roadmap? What does that look like? Evaluate all the components. You put that plan together, and out of that comes the magic number. What does the size of the nest egg need to be so that you can retire comfortably? Not surprisingly then, step 3 is you got to build that nest egg. The plan's the roadmap, you got to follow it. That includes achieving the investment returns that you've assumed in the plan. Every plan assumes that your assets are going to earn something, 3, 4, 5, 8%, whatever it is, you got to actually achieve it, which means you have to diversify, allocate that portfolio effectively. It's not as easy as you would think. The right mix of stocks, bonds, and alternatives, etc. will help you. The wrong mix will hold you back. Number 4, create a sustainable income stream. It's one thing to build up your nest egg, build up your assets, but it needs to be able to generate an income stream which meets your retirement needs. It's optimized and sustains the portfolio through the remainder of your retirement as well. Now, there are some rules that can help you, but there are also these rules that can hurt you. For example, the current rule is the 4% rule. Well, yesterday's rule, the old rule, was 5%. So the question is, well, what will the rule be in the future, in your future? You can't just take a rule and apply it. You have to work this out for your unique situation. Step 5 then is to manage healthcare costs early in retirement. They are liable to be the largest expense you have, and most people don't recognize that. They blow through it and they don't plan on that. Number 6, plan for a comfortable retirement. You don't want to worry during this phase of life. So you want to put this whole thing together, this whole plan in one document, make sure it's thorough, it's in one place and everyone knows where it is, and then follow it, use it as the roadmap that it is. And finally, number 7, as you're going through and in retirement, reduce debt appropriately and manage expenses. You see, there's good debt and there's bad debt. You want to pay off the bad debt. You don't want to pay off the good debt because the good debt is actually helping you. And then manage those expenses to the plan. It's a little complicated. There's a lot here, but you can retire at 50. And here's where a 100% objective fiduciary advisor can help you. It's no time to do this as an amateur. Use a professional, please, to put this together and monitor and manage it. We at First Financial Consulting would love to help you. We've got decades of experience in doing just that. So give us a call, send us an email, go online and schedule an appointment. We're here to serve you.